Hi, I'm Brendan Mills and welcome to episode 5 of Finance Coach TV. You and your business's personal finance coach. So in today's episode, we're going to look at what a profit and loss statement is. In the last episode, we looked at what a balance sheet is. So a balance sheet being the assets, the liabilities and the equity of a business. And we used the example of a house. Now, in today's episode, we're going to look at the other key financial report a business has, which is its profit and loss. And its profit and loss, we're going to use the house example because like I said in episode 4, quite often people get overwhelmed by all the terms and all the numbers and all the information, especially within a profit and loss, because generally speaking, a profit and loss statement is a lot more lengthier than a balance sheet statement. So, with the profit and loss, we've got 3 items which are the key areas. We first of all have revenue, which is the money or income generated by a business over a period of time. Then it's less the expenses, which are, the money which is required to generate the revenue of the business, such as wages or materials. And then the difference between the two, if our revenue is greater than our expenses, we have a profit. Or if our revenue is less than our expenses, we've got a loss. So quite often what businesses do, or business people do, is they only look at 2 things on their profit and loss. They look at their revenue because it gives them a sense of vanity and often a chest beating exercise where they can go, oh, my revenue's tripled this year. And then the other thing they look at is whether they made a profit or loss. So with a profit and loss though, there's so much more information at your disposal which you can use. So we're going to focus on those areas as well. But again, for today, we're going to use a simple example. Now, unlike a balance sheet statement, so a balance sheet statement, I neglected to mention this in the last episode, but a balance sheet statement is as at a date in time. So if we took one today, that's what it is today. If we took one tomorrow, it's going to look different. A profit and loss is over a period of time. So it's looking at all your revenue and all your expenses over a period of time. And that's generally over a month, over a quarter, so 3 months, or a half year, or a full year. They're generally the 4 time periods people look at in business for their profit and loss. So let's have a look at using our example of a house. Now, in episode 4 with the balance sheet, we used it as a house we owned. But in this example, we're going to use it as if it's a rental property. So we have our house that we own, but we rent the house out to tenants. So, let's say we get $50,000 worth of rent from the house. That is, in a business sense, our revenue. So if we're thinking of this as our P&L, and this here from the last episode is our balance sheet, our P&L, it's going to show our revenue. So in this case, for a rental property, it's the rent that we earn. Then we've got our outgoings, and in this case, our expenses. So our rent of $50,000 and our outgoings of $25,000 give us a profit of $25,000. So that's all of the business's profit and loss is. It's all the money that you've earned, all your outgoings, and then the difference between the two over a defined period of time. So you can look at my preferred method of looking at a P&L is on a month-by-month basis because it's a lot easier to identify patterns and trends within the business. So think of that. Like I said the other day, your balance sheet is what you own and what you owe and the difference, and your profit and loss is what you've received and what's been outgoing and the difference between those two. So the key takeaway points for today's episode is first of all, get your profit and loss and look at it on a month-by-month basis. The key thing is to make sure your bookkeeper gives you your profit and loss on a monthly basis, no greater than 3 or 4 weeks after the month end. That's worst case scenario because you need to be able to see this information with the strategies we're going to start implementing as soon as possible so we can make change and improvements. And start looking at your business's profit and loss on a month-by-month basis over as far a period as you can go back, because then you can identify trends and start analysing things within your business. And when you're looking at all the revenue and all the expenses, just keep coming back to that simple example of the house and going, okay, what's coming in, what's going out, and what's the difference? So what's happening in my business with those areas? So thanks very much for watching, and I look forward to seeing you in the next episode.